Welcome back to Smart Money Academy, guys. Today's lesson is the draw on liquidity, which is probably the most important asset in your trading, right? If you don't have your draw on liquidity, you should not have a trade at all. It's it's the only it's the first confirmation or the first thing needed for every single trade. Before I continue, I have to specify that liquidity in the markets is pretty much everything, and I will have a lesson on that alone. So with that in mind, let's keep going. The draw on liquidity is what pulls the price, right? It usually wants to go back to imbalances or something like that, but I'm gonna get more into that later. But it's the draw on liquidity is acts as like a magnet for price. So it's important to understand that the price moves to take out orders or to fill imbalances or to anything like that. And once it's grabbed, it'll usually reverse or expand in the intended direction. And this can happen on all time frames, right? Like your draw on liquidity on the daily might not be the same as your draw on liquidity on the weekly. Maybe on the daily you think we're going to this orange line here, but on the weekly the draw is lower, right? I'm gonna get into some real examples later there. I'm just kind of like spitballing here, like, but you understand what I'm trying to say. So the best thing to do really is to try to align all your draws on liquidity, or to at least understand the narrative behind where the price is gonna go. So okay? Price is usually drawn towards like equal highs or fair value gaps or EQ or trendline liquidity or uh, major swing point zones or daily high, weekly high, right? Those are all possible draws on liquidity. I'm going to get into some of those in future lessons, but for now, we're going to focus on just the concept of the drawn liquidity. Here I'm going to demonstrate a little bit using this. So something like this is very strong here, right? Because here you have what is called equal highs, and one high is already a drawn liquidity in its own usually, but having two swing highs is or swing lows, works with the lows too, usually means that we're probably gonna grab some form of liquidity and then like just straight up go. There's also trendline liquidity is what it's called. It's when the market moves like this, right? And you have your trend line here. And usually those are all individual like little liquidity pools, if you will, and market tends to want to this is like run them like this before making a move higher sometimes, you know? So this works too. It's important to understand that sometimes market is going to be going up and you have to mark it out and EQ and OTE, which I'm going to get into in further lessons, but sometimes it might just want to grab here and then go back higher as well. So those are all, well, no, they're not all of them, but there's some of the ways that market is going to grab liquidity before making a move, right? Like this one here might send back down after, who knows. The one thing that you need, and that is also probably going to be a lesson of its own because it's really important, is to understand the concept that to have a confident idea of what you're drawn what okay of what your drawn liquidity is, you need to understand this right here. So market goes like this, okay? It's moving, whatever, grabs this liquidity here from these equal lows, let's say, okay? What stops the market from going like this and then rejecting because we've just switched into a bearish order flow, okay? So here's the truth about this is that it could either go down or it could swing up after grabbing this liquidity here, right? So it's either this or this. What makes it so that we're confident that the new draw is this low, let's say, that's here. Let me make it clearer. Okay, so this low here, that's the new draw, instead of these two here. Or or this high here, right? So is it going here next or is it going here next? Well, what you want is to look for what's called displacement, which means you don't just take a long off of here and say, all right, stop here, easy peasy, took the equal lows and we're going in. That's not really what you want. You want to confirm your bias with, why do I keep doing this? You want to confirm your bias with what's called displacement. So let's go check it out. So I'm gonna go to somewhere that it's already happened. So let's say here, right? We took these lows here, okay? We took this low here, right? And we went down. We kind of dilly-dallied at this liquidity point, went back up a little bit, and then we went down further, okay? Now, what makes it that we know that the draw is probably lower? Honestly, this candle right here, right? This, to me, is a displacement candle, this one here. It's a big move quickly. It's not one of these little candles here that you don't know what's going on here. It's a big one, okay? Now we take this low here, right? This little low right here. I'll put it in red. It'd be easier. That's not red. All right. This low. Where is it? Here. Okay, so this low here. Okay, it takes it, goes up. Now this candle here is much bigger than all of the ones here. Wouldn't you agree with me? So this shows me that the next draw is higher. And we didn't get a closure below this, right? Because like I said in candles, wicks do the damage, bodies tell the story, okay? So we're gonna go to somewhere else. Just off of the dome here. Let's do this one here because it's quite fun actually. We have relative equal highs here that were not taken, okay? Now, here we have internal high. Sometimes we don't need external highs. We just need internal highs. But this is also probably another lesson. But so here we have our equal highs. Big displacement down. Right here off of this candle. Okay? But it didn't take this high. Now, after seeing this massive displacement down, me personally, I'm not comfortable taking along to this high, even though we have equal highs. Why? Because this candle here tells me that the drawn liquidity is now lower. How much lower? We don't know. So what happens is that here you have a failure swing to take the high. It goes back down. Again, fails to take this high. Big candles to the downside. And then it starts accumulating. Massive candle to the downside. At this point, I know we're not going here for now. Okay? So now, goes back up, bang! Again, massive candle. So now I know that these highs here, these like relative equal highs, were the draw, and the draw has now been taken, so we can move lower. So the draw on the 1 hour time frame here were these highs, but on the, I don't know, the daily time frame, it was probably this low here, right? And it took that, and it took it big time. It might have even been this low. So what I'm really trying to say here, guys, is when once you understand the concept of drawn liquidity and you say, okay, NQ right now on the daily time frame, right? Big displacement to the downside here, perfect, right? I already have my EQ marked. I already have my OTE marked. We're currently the OTE mark of this. Now we've been bearish, big displacement down. Do you really think we need to go take this high here? Definitely not. Could we take this? Sure. This? Sure. This high? Probably not. I'm thinking the rest of the week is going to be probably bearish. Now, am I sure of it? No. Why? Because the displacement down already happened. It took this low here, right? And now I want to see another big candle down to know that we're trying to go lower, maybe to here. Okay? Another thing for drawing liquidity that's not talked about a lot by other streamers, I find, but I've noticed in my own experience, is that institutions love round numbers. Now, if you're trading like this, you're trying to trade with the big guys. Okay. So what do I mean by round numbers? The 500s, the thousands, right? 19,000, 20,000, all those prices. They're all this. See this reverse exactly at 20,000. This one here, this price line right here. Look, let me show you. Oh, I just closed my internet. There's no way. Let me reopen it. It's have had so many pages opened. Oh, I think I started my stream too. Did I? Did I start my stream by mistake? I might have started a stream, low key. Oh well. Sometimes we're streaming. Um. So yeah, we're streaming a YouTube video, guys. What's up? So here, it's exactly 20,000 this price here. Okay. But it that's all it needed for people to get in and orders, right? Here it's exactly 19,500. Well, not exactly. It's 19,510 slippage, whatever, right? So there you go. So round numbers are also a good indicator of what's it called, of the draw on liquidity, or on of liquidity in itself. So it's also important, guys, to note that you don't want to chase the price. You don't want to predict the price. You want to react to it, like I said, with the big candles. So let's say here you don't know where the market's going. Just wait for it to take your draw and then look how it reacts. Is it going to displace from it, or is it going to reverse? And right? So let's say you think the draw is, I don't know, this high, right? Why would I want to take a trade in this when I have no idea if it's going to go here? I mean, after this, you're pretty confident. But like before, like especially with these candles, I don't know, I'm not taking a trade towards this, right? But once it's taken and it pulls back like this out of it, I don't expect to go back to this high here. We can, but I don't expect it, right? So all these little highs though, this is getting taken for sure before moving down. For sure, for sure, for sure, for sure, for sure. This is a cumulative liquidity, and we like that. We like that a lot. So it's important, guys, to use the higher time frame for drawing liquidity, but also the lower time frame. If you trade on the 1 minute chart, do not use the daily drawn liquidity, right? Use the daily drawn liquidity as confluence for bearish bias, and then wait for it to take a bullish drawn liquidity, or a bearish drawn liquidity on the 5 minutes. So let's say your daily, you expect it to go down, right? Okay, so let's say we're here on the day I expect it to go down. Why would I wait? Why would I take a trade towards this drawn liquidity when I can take a trade towards all these if I expect to go all the way down here, right? So you might as well wait for market to take your draw, and then once you were right and displacing from it, you say, I'm the best, I was right, let's take this trade all the way down here. Easy like that, right? Oh, I just scared my cat. I am kidding though, but yeah, you guys understand my point. Where don't fight it. Don't just, if you think the market's going down the daily, just scale down to the lower time frames. Wait for your draw to be true on the lower time frame too, and then take the trade. And it's as simple as that, guys. That's pretty much the draw on liquidity, to be honest. And you guys need to understand this concept before going in. If you guys start trading on demo, I would suggest just focusing on the draw on liquidity and just taking trades, right? Let's say I think the draw on liquidity is this low here. What I would suggest, take the trade. Who cares? You're on demo. Take the trade. Put your stop here. And you think the draw is here. Right? Market should never go back here before it takes this. Or put your stop here. Even if it's a bad RR, just take the trade. And then you'll see if you're right or you're wrong. Right? Now don't do this on a live account, but by taking the trade, you're taking the habit of trusting yourself and the idea that you did of the drawn liquidity. Journal it after. It's very important. And if the market takes this high, right, why? Why did it take this high and it didn't go to my drawn liquidity? Well, there was internal drawn liquidity. It did not need to go here. I already taken the liquidity to the left of us. Any reason, right? But it's important to put time in the market, to practice, to do what you got to do, and you guys have to practice. You guys have to look at it. You guys have to see how it reacts, how it does, what's going on, what's happening, and all those good stuff, and all that good stuff. So that was pretty much it, I think, on the draw on liquidity. If you guys have any questions, leave them in the comments, or you can always join the Twitch to watch me live stream. And yeah, don't forget to like, subscribe, comment, and follow me on Twitch, Instagram, Twitter, not Twitter, TikTok, and yeah, that's pretty much it for me, guys. Take care, have a good one, and I'll see you guys in the next one.